Welcome to LeonCo and welcome to another video. Welcome to LeonCo, and on this week's video we want to discuss something that is going to happen in the next couple of days, and that is on February 11th. The Walt Disney Company is going to announce its quarterly earnings. If you've been following us on our last week's video on Friday on our 100 dividend a month portfolio, we discussed on why did we invest last week on Disney and why did we invest. This was regarding the Q4 earnings for the Walt Disney Company, and what do we expect for these quarter earnings is something very important. Well, if you've been following the company or if you've not been following the company at all, you've noticed that the parks and resort section of the company has been starting to slowly but surely build back up to its non-pandemic era. And how is this so? Well, in Orlando, the parks are starting to they're going on and about. They continue their construction for their new attractions through the parks. They have still having a steady flow of clientele of people heading towards the park, even though they still have their capacity limitations and they're still requiring people to wear their masks. But they have been slowly but surely starting to get into a new normal in their parks and recreations. Down in California, Disneyland, well, they are trying their best to try and start to open some of the sections of the Disneyland. Specifically, they are trying throughout these couple of weeks and couple of months to try and open Main Street USA, to try and do events so people start to going back to the parks in California. They're trying their best thanks to the limitations of the California government. But all around, the company has been trying to keep afloat. But the most important thing in the Walt Disney Company, and one of the main things that we expect from their earnings, is their earnings from their streaming services. That is Disney Plus, Hulu, ESPN Plus. And why is because they have jam-packed specifically their streaming services in Disney Plus. If you've been following, they have announced a variety of streaming services both on series, movies, and other media that you can look for in their streaming services. They have announced the MCU series. They have straight to streaming services movies, as well as they're trying to move the movies back into theaters when theaters come back. So this is the main pillar for this quarter, the streaming services. Disney Plus, they have trying to rebrand their ESPN services, trying to build up new programs, build new IPs in their ESPN sector, and Hulu is going to be a big part in the future when Disney starts to move on to create more mature content that they can provide into the Hulu streaming platform and leave more family oriented in the Disney Plus sector. So this is going to be the biggest pillar for this quarter for earnings, as they have been announcing through the couple of weeks and throughout the couple of months. When the streaming service first launched, they have beat expectations to year of date from their clientele subscriptions to the services. But this is going to be the huge part. And if you've noticed, even though we've hit the pandemic, even though we've hit financial struggles and economical struggles throughout these years, the stock for the company has slowly surely maintained its value, and even not just maintain it, but they have gone into 52 weeks high. So expect for the company stock value, and expect for the company value as a whole to keep going up as things start to go back into normality, as more people get vaccinated, as restrictions go down, as we start heading to this new normal, when the parks and resort section goes full on, when California opens back on, and specifically when the cruise line gets back on. Because if the company has been maintaining its value, maintaining its revenue throughout this whole situation, when the company is full on back to its 100% of services, expect for the stock value to go up once again, because they have presented themselves and they have withstand the test that they're a company, even though they are an entertainment and value company for people, they can withstand different types of situations that not just happen locally in the United States, but globally. So that means that they are a good investment for not just the short run, for the long run. So keep this in mind. We wanted to share with you guys ahead of the quarter for earnings, because if you're not into investing in Disney, this could be a good window of opportunity for you to start investing. So I hope you guys are staying safe, staying healthy, and always remember to have that king mentality.